Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 31st. Last day of July. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis. I do the same thing in these daily market commentaries, but I go a bit further and talk about option strategies that we can implement into our portfolio based on that market directional assumption we come up with from all of the data that we receive on any given day. I go a bit further though. When we're talking about option strategies, I have guidelines for the newer and savvy trader to implement into our portfolios. We're not just going out there and deciding today we're going to put on an iron condor. No, we need to know what is going on around this underlying. We need to dig down on the internals and figure out if it is the right strategy or what is actually the right strategy for that assumption we've come up with. All right, so let's get on with the overall economic data. Across the pond, really not a whole lot of major economic data except for, well, I mean, it's still not major. It's pretty light, to be quite honest. Spanish flash GDP coming in at negative 18.5%, not unexpected there. Italian preliminary GDP coming in at negative 12.4%. Expected to be, though, negative 15, so better than expected there. Consumer Price Index flash estimate for the European region, higher than expected at 0.4%. Core CPI, Consumer Price Index, coming in at 1.2%, expected to be 0.8%. Now, remember, the core CPI excludes food, energy, alcohol, tobacco, things that are going to be a little bit more volatile on any given at any given time. So when you strip that out, you can see that that number is a little bit higher. Obviously, those things affecting that number, the food and energy suppressing that number as it shows up in the CPI coming in line with expectation. When you strip it out, much better than expected there. All right. Now, let's move over here to the United States. We got personal consumption expenditures price index at 0.2%, expected to be 0.2%. They did revise last month's number up slightly by 0.1% there. Now, personal spending. Now, this one kind of struck me today because on mainstream media, they were talking about personal spending falling off of a cliff. And I pulled up the chart right here. We can see personal spending coming in at 5.6%, expected to be 5.3%. One thing to note, though, it's not falling off of a cliff. It's actually coming back. They might be talking about it's falling off of a cliff from that major high we saw of 8.5%, which is, as we can see, unheard of. I mean, I can go back even to 2008 and not see a personal spending number as high as 8%. It's just flatline what the normal chart would look like. So for people to say that it's falling off a cliff based on last month's number, well, we also know we had these stimulus checks. So people were out there spending that money in different ways. This is why I said that these stimulus checks right now at this point in time to save this economy is very important, because you can see right there people were spending that money. And what happens is it creates a velocity of money when people aren't told how to spend it, like we did in the last administration on cash for clunkers, and they're trying to save the automobile or certain sectors of the economies here in the United States. That doesn't work. That doesn't create velocity of money like this does. Everybody is going to spend that money different, and when it filters out throughout the economy, it really helps support that area. So a 5.6% is still a very good number, and yes, we have rebounded from those lows when we saw it. That's when it really cratered, was right when coronavirus came out and people were getting laid off and not spending because they were worried about the outlook. Once that money came in, a bump in the unemployment, a bump in the stimulus checks, that created velocity of money throughout the economy. And that's actually why I think we're seeing actually pretty decent numbers coming out of some of these corporations because people were out there buying different products. So surprising for the most part to the upside. And we'll talk about some earnings here in a little bit. We also got personal income. Obviously, that one is a face plant, almost like a scorpion where your feet come over the top of your head. It came in at negative 1.1%, but better than the last month's number of negative 4.4%. So personal income is going to wane right now. Coming out of this whole pandemic, even when we start to see the unemployment rate start to come back down, we're still going to see personal income relatively subdued. Why? Because there's so many people out there looking for a job. They're going to be willing to accept a job for less money than they were just making, 6 months ago. All right. So 6 or 8 months ago. Then we got the University of Michigan consumer sentiment coming in at 52.5%. So that is a pretty decent number. We were in the 90s before all of this stuff happened. Chicago PMI. 51.9, expected to be 44. So this number doing very well. That's actually helping the upside. If there is much of an upside right now, it should be giving some buoyancy to the overall markets, because anything in those PMI numbers above 50 is expansion. A 44 would have been expecting a pretty decent contraction yet, but we got that 51.9. That's above the watermark. That is expansion in the economy. Let's get over to the crude oil inventory or crude oil market below that $40 psychological level that we've talked about. Now, the real number, though, you guys, is 39. That's what we're going to be looking for. A settlement below 39 is going to be very bearish for this. Why? Because we get outside of that value area where the most time and volume has been spent 70% of that time. It starts getting a little overextended, but people start to panic out of some trades once that happens. Also, it's a 50 Fibonacci mark. It's also lining up with the 50-day moving average. So all of those things combined, a break below that is pretty bearish, and we might even see a 32 in the crude oil if we break below that 39 handle. We break out of that, it's going to look pretty bearish. All right, bonds, half a point off on the day. But again, we are talking about this time and time again. Right there at that 82 handle, that is going to be a bit of a resistance. We can see right here along the lines that it has acted as a resistance in the past. A pretty major resistance, to be quite honest. Yes, we have pierced above that, but the settlement is what we're looking for, and that's right here on this number. You can see that is the 82 handle, 82 even. All right, so you can see we bounced up against that quite a few times and have not been able to really pierce above that. Why? Because interest rates aren't probably going to go that much lower here in the long term. Yes, we are seeing 15-year rates on mortgages below 2%. So if you haven't gone out there and refinance, probably a good time. So make sure you check that out. Check out Quicken Loans or whoever. My friend does, Anderson Financial. So he said that they are knocking it out of the park this month. So good time to refinance. I don't believe that's investment advice. That's just basic common knowledge. So something to maybe keep an eye on. So we're bumping up against that Fibonacci there. A break above that. We've got another heavy Fibonacci above that. So 82 and 83 in the bonds we're going to see some really slowing down that momentum there to the upside. So we'll keep an eye on that. I don't think we're going to break above that, because I just don't think at this point we're going to see much more downside in interest rates for the foreseeable future. I think we're going to trade right around what I've talked about in this 80 handle for a little while. Now, a major printing of money more than what's expected, that could cause weakness in the overall bonds there for the interest rates. But I think we're going to not probably see those lows in interest rates we saw or the highs in the bonds that were on that chart. Gold futures just now coming out of that 2,000 marks. We printed 2,000. That is a historical high. I just knew, I talked about it. We had to go up there and print that just for the printing of that handle. It just seems like the markets have those kinds of targets to go after. The next thing that we're going to probably be looking at would be this 2197, or we'll just call it 2200. All right, so that's what we're going to be looking for as a next move, because it, to me, looks like this market is wanting to start to trend to the upside there. All right, so I don't think that we're going to really retrace, but if we do, keeping an eye on this 1923 area is going to be key for the bulls to try and support. All right, VIX is moving higher. That's because we're seeing some major weakness across the board in the overall markets. I was extremely surprised yesterday when we got that massive rally. It seems like we just pivoted as soon as I released the video. It was out there and the market just said, Wolfman, we are going to rally and we're going to blow the top off of this, and that's exactly what happened. But right now we can see the Dow Jones Industrial Average coming off by about 200 points. The NASDAQ off by about 30 points, basically a half back on what we saw in the rally yesterday, and rallying up to finish on the highs across the board in the equities. Then we move over to the E-mini S&Ps off by about 21 points, again finishing on the highs yesterday, but it bumped up against that Fibonacci, not the Fibonacci, the value area high, and that's where we started seeing that momentum start to slow. Today, opening up and immediately starting to see the sell-off happening. Here we have the E-mini S&Ps, and you can see when I released the market commentary, I got it done a little bit early yesterday because I had a lot going on, and the market almost unabated into the close to settle on the highs. Today, you can see as the market opened, almost a full sell-off. This is where we got the PMI numbers that made this look pretty decent. Got a bit of a bounce there, but the overall markets are just having a fit today, it seems like. All right, even with the Electronic Arts, EA Sports is really the biggest driver right now. I've talked about this. I thought that they were going to do very well. My kids on this all the time now. And they are all kind of, it's a pay-to-play type of video game. So for us older generations that used to go out and buy the cassette and play that until the thing broke, that's not what these guys are doing these days. You go out, you still buy the game for quite a bit of money, more than what we paid for, probably twice as much. And then there's all these in-game upgrades where they consistently get that churn of people buying different products on the site, which does very well. As you can see here, Electronic Arts did very well, hit it to the upside. I tweeted out yesterday that I was selling some puts in there. And I went into the weeklies that expire today, and they were the July weeklies that expire on the 31st. Sold those 130 puts in there for 84 cents, bought them back for a nickel today. I talk about this when we're doing earnings trades. You want to cover those things, especially if they're a winner right off the bat, okay? This is a perfect example of that. Although the weekly trade probably is still, I probably maybe could get out a couple of pennies, but the bottom line is you never really want to see that market come back to you like this, and that's why you cover it right off the open. You want to catch that lightning in a bottle especially if it's on a winner. And you can see the volatility crush to help me out with the directional move too. A couple of things going on. Apple came out with earnings. I did not play this, but I've talked about this for the Microsoft earnings, that all of these schools are buying these tablets, whether it's Apple or the Microsoft Chrome. One of the things that they talked about in the Apple call was that they are seeing huge sales from winning bids with these schools. So Microsoft going to be doing the same thing, so they should be doing very well. Also, their iPhone 11, which I was kind of fading, that was going to do very well, especially in this type of economy, but they were doing very well with that, and finding that a lot of people are buying some of their lower priced phones as well. So they're still churning and doing very well. So as you can see here, just knocking it out of the park to the upside, up above 400 for the first time. By the way, Apple adding about 100 points to the upside in the Dow Jones, despite the fact that the Dow Jones is quite a bit in negative territory. Vital Farms, this is a great story. This company doesn't produce a lot of their own eggs, but they support the small farmer. So that's the only reason why I threw this out. They IPO'd today. They're up, as you can see, over 60%, $13 on the day. Doing very well, but I just wanted to throw this out there. Keep an eye on it. There's no options related trade. I don't have a position in this one, but I just thought it was a really great story that these guys aren't one of those massive co-ops of, actually they're probably closer to a co-op than just a massive conglomerate that has these chickens stuck in a big barn and are producing eggs. These guys are supporting the small farmer and have stringent guidelines as to what these farmers can feed them and stuff like that. So great story over here with Vital Farms coming in and just knocking it out of the park on their day of IPO. All right, so that's all I got for you guys. Check out Pro Trader Strategies. We just did a webinar on the poor man's covered call. Great strategy for a smaller account, a newer options trader, especially if you're used to trading stock and not really used to how we figure out pricing in the options. I go through all of that stuff and show you a roadmap to implementing different option strategies. I have specific guidelines as to what we need in and around an underlying before we start trading options. And it will lead us to the right option strategy for the assumption that you have. All right, so without further ado, we've got to go over our disclaimer. Please take a moment to go over this and have a great weekend. If you can't take that, take it easy.